A very good morning, everyone. I hope everyone is doing great, and we are here to make your day much more fruitful and exciting. Today's event is organized by Entrepreneurship Cell in collaboration with StockPe. This session is on key points on investments and stocks, followed by an exciting contest where you can compete and win exciting prizes. Now, as we know, the world is rapidly changing and has given us various ways to make a fortune. Investing in stocks is something you could consider a trend or rather a must. Does not matter if you are a college student or a working official, you can invest and generate a considerable wealth out of it. But it definitely isn't something you can master in a few days. It requires patience and some knowledge to an extent. For this, today we have StockPe, a fintech startup which provides a platform where you can learn and implement the basics of stock market in real time. Moving on, we have Mr. Hridesh Kapur, a software developer at Vanguard USA. He is also the head of product at StockPe. Mr. Hridesh will be telling us about the stock market and how one can start their investing phase. So before starting, I'd request the audience to take snapshots during the session as it is required to fill the feedback form and for the e-certificates. And if you have any queries, you may put them in the chat box. Also, the Play Store link will be there in the chat box. Download the app beforehand if you have not already. Now, I welcome Mr. Desh Kapoor to take over and begin with the session. So, please go ahead.
Hi everyone, just give me a second. I'll start sharing my screen. All right, let me know when you can see my screen. Right, I think it's good. Right, hi everyone. Thank you for having me here at your esteemed university and at such a lovely event. You all seem like a great crowd, and I can't wait to share some thoughts with you today. A little introduction about myself. I'm Hridesh Kapur, software developer at Vanguard for about 3 years now. As some of you might know, Vanguard is an investment advisor company with over $8.5 trillion in assets under management. It's also the world's largest mutual funds provider and the first company to introduce the world to ETFs or electronically traded funds. Originally, I'm from Mumbai and I've done my bachelor's from India while I came to the US to further my studies. And I've been in the States for about 7 years now. Therefore, I would say I have some experience of the issues and problems faced by my peers while trying to step into the Indian finance markets. All right, so let's delve right into today's topic, which is StockPe 101. Firstly, what is StockPe? StockPe is an initiative that is simplifying financial education for everyone. The finance market in general gets either of these two reactions. Either people get overwhelmed by the vast amount of knowledge that is out there, or they get spooked and scared by their colleagues and associates. I'm pretty sure almost all of you have heard this staple dialogue before, right? मैंने स्टॉक मार्केट में डाले थे पैसे डूब गए सारे. And that's what got us thinking, how do we break this mindset? How do we actually educate the Indian audience? And that's when we had our light bulb moment and we created StockPe. So we've combined one of the most fun things to do, which is playing games, and one of the most complex things or most complex topics, which is finance. And we've combined the two. So our app not only engages you to learn about the finance market, but it also educates you about it. So, for example, um, Did you know that the adaptive moving average is a technical indicator that is used for constructing a moving average with low sensitivity to price series noises and is characterized by the minimal lag for trend detection? कुछ समझा? मुझे भी नहीं समझा. But that's what StockPe is here for. It will help you remove all this information overload and utilize real data as your personal playground. You will learn everything there is to know about the stock market while playing tournaments. Real data, real learning, and zero risk involved. Plus, you can play against friends and family to reach the leaderboard. And when you win, you can also show off your badges and rub it in their faces. Let's not forget, there are exciting prizes to be won when you reach the leaderboard. And what's there to lose? It's a win win situation. Prizes se yaad hai, let's talk about something that happened in 1992. And no, I'm not talking about the 𝐻𝗪𝗏 scam. I'm talking about one of the most famous traders ever, one of the most influential and brightest people to ever step into the finance world. His name is George Soros, also known as the man who broke the Bank of England. Back in the day, Europe did not have a common currency, which we now know as the euro. Europe had a mechanism for trading, which was European Exchange Rate Mechanism, or ERM. In simple terms, it was an exchange in which all the European countries linked their currencies to prevent any large fluctuations of relative value. So basically, it put an upper limit and a lower limit in which the exchange rate could vary. I won't get into the technical details, but essentially, the way the price fluctuation was set, along with the inflation rate, caused the British pound to become unreliable and weak. And that's when our billionaire philanthropist, George Soros, comes in. He was following these currencies very closely and he understood the situation the pound was in. And he decided to go up against an entire country's currency and its central bank. He decided to short against the British pound. And he was so confident about his strategy that on the 16th of September 1992, he took out a profit of $1 billion from the British government in one day. Since then, this day is known as Black Wednesday. So this entire tale to tell you is that one person, with partial knowledge about the market could do so much in one day. Imagine with the right resources and the right learnings, the things that you're going to get from StockPe, it's only an imagination of what you can achieve. And as they say, the next step is to the moon. So obviously, in order to achieve all of this, you need some strategies. And I'm here to talk about a few very basic strategies to maximize your time and effort. Let's start with a very simple yet efficient strategy, which requires more of a physical presence rather than an intellectual one. It's called scalping. So scalping is a fundamental strategy that involves taking fast profits of small price changes rather than waiting for the market to fluctuate. It works amazingly well in choppy markets where the market essentially doesn't really go too high or doesn't really go too low. It's a low risk, low reward strategy that warrants you to be vigilant while buying and selling positions. As a scalper, people tend to focus on making profits during high velocity moves, like there's some news about a stock or there are some economic data that has been released about some company. So from a trading perspective, a scalper has to look at 1 minute charts or maybe even create real-time charts while making a decision. So generally, a scalper looks to gain very minimal paise out of every rupee. So what I mean by that is, since you will be going for these minimal changes, you might think of buying a stock at or something at 1 rupee and sell it at 1 rupee 2 paise. This small profit of 2 paise is something that scalper is looking out for. And their entire strategy is to make such small profits. As a rule of thumb, always look at charts that can go up in the next minute or two. It doesn't need to be a huge jump or a huge spike. It can only be a small jump in maybe 0.05% or 0.01% even, because all we are worried about is that small price change. वो कहते हैं ना, बूंद बूंद से सागर बनता है. So this is the exact place where that strategy is used. Similarly, in this chart, as you can see, the buy prices and the sell prices are all within 1 rupee. But doing multiple trades allows you to take out a bunch of profits in a quick amount of time. There's only one warning with this strategy, is that you need to be very vigilant while looking into the strategy, because even a single trade could make or break your entire day. If you're not extremely careful in what you're buying, it could lead to a loss that is bigger than your other small gains. So it's a very simple strategy, which is there for the faint-hearted. If you're worried about losing money, or if you're worried about losing in this tournament, you can use a strategy where you can buy and sell of very small changes. Right. So now that we've spoken about this low risk, low reward strategy, it's only fair that we discuss about a high risk, high reward strategy. And I'm assuming everyone here has heard about IPOs, or initial public offerings. If not, don't fret. It's just a privately held company that now wants to start offering stock shares to the public. And doing so allows them to raise for the capital that they need. So what happens in an IPO is that it can trigger a lot of media attention. And obviously, with media attention comes hype. And all of that tends to cloud the judgments of an investor. And when someone decides to invest in an IPO, they are basically agreeing to buy the stock shares at the initial offering price. And there are certain requirements to get in, but all in all, it's a little risky business. So I can just give you a couple of examples of the mega IPOs that you may have heard about. The first example I can give you is CCD, and I'm pretty sure almost everyone has heard about Cafe Coffee Day, right? So Cafe Coffee Day had an IPO back in 2015, and guess what happened to it? Everybody knew about it. Everybody was talking about it. Media hype, news hype, sab mila. End May, the offering price for the CCD stock was 328 rupees, and the closing price after the first day was 270 rupees. It triggered a loss of 20% in just one day. So what happened was that the company was not doing really well, but due to its brand name and due to its hype that it got, people overbought and oversubscribed to the IPO. And then what happened? It just crashed. And people lost lakhs of rupees in a single day. And this is just one of the failed mega IPOs. And there are a few others as well, but I'm not here to scare you. There have been some really good IPOs as well. So recently, like last year, in November, we saw one of the most influential IPOs of the Indian market, Nykaa. I know it's a famous IPO that happened just recently. So its offering price at the start was just about 1125 rupees, and the closing price for Nykaa was 2018 rupees. It saw an 80% jump in one day. Imagine buying a few shares at the IPO, and you could have seen a profit of almost double your money just by the end of the day. So you could have invested, let's say, 10,000 rupees, right? Not even like a very big amount. And you could have left with 18,000 rupees in just one day. And those are the IPOs that people should look out for. I'm not saying it's easy. If it were, everybody would be doing it. It takes time and effort to find the right IPO. But if you do find the right one, there is no limit to the upside of it. Right? Okay, so now that we've spoken about a couple of strategies or a couple of investment processes, let's talk about some key tips and some jargons that everybody uses in the stock market. The first tip I would say is everything in the stock market depends on supply and demand. Everything. It doesn't matter what your PE ratio is. It doesn't matter what your AM is. All these are just technical terms. It doesn't matter about that. Everything depends on supply and demand, right? So I'm just going to give you a few terms that are very common or you might have heard before, and I'll just go ahead with it. So we have bulls and bears. I'm pretty sure most of you have heard about it. The term bulls and bears are originally derived from how that animal particularly attacks its opponents. So a bull always thrusts its horns when it's trying to attack someone, whereas a bear always slashes down. And these actions relate to the movement of the market, basically. So if a market trend is upwards, it's called a bull market. And if a market trend is downwards, it's called a bear market, right? It's very simple. There's no complexities in that. Moving on, we have some other terms that are very frequently used, which are support and resistance. And as you can see in the graph, it's the level support is the level at which the demand is strong enough to stop a stock from falling any further, right? So if let's say if a price is just falling and falling and following, at a certain point, it is going to retrieve a support because the demand is going to be enough for that particular stock to prevent it from falling any further, right? Similarly, there's also a resistance level, which is the level at which the supply is strong enough for a stock to rise any further. So this is how, we always have any technical indicators or anything. It's always support and resistance. All right. Now, just to give you an idea about the tricks of the trade, I would say. So always, keep your emotions at the door. You need to have a strong temperament. You need to keep your cool, and you need to have patience, right? You can never rush into making decisions. Keep this mantra in mind: haste makes waste. So try to plan ahead and stick to the strategies that you trust. Do not, I'm sorry, I think something is wrong. Okay. So yeah, do not, try to time the market, right? So let me just give you a couple of strategies that you can try out. Ooh, I think I went back. Give me a second. Right. Yeah, just let me give you a couple of strategies that you can try out today. There's something called as the rupee cost average, right? So what does that mean? So let's say if you were buying a stock at 10 rupees, right? And it keeps on falling down at maybe 9 rupees or at 8 rupees. What you could do is, instead of just putting a lump sum amount of money at just the first, price that it opened, you can keep on investing small amounts throughout the day. So even if the price is at 10 rupees, you've invested, let's say 100 rupees on that 10 rupee stock, and it falls. Don't fret. You can keep on adding money to that. You can keep on adding 100 rupees, 100 rupees. And then what happens is you average the loss out. So you're essentially not risking a lot of money in that one particular, I would say, one particular lump sum money. You're investing it throughout the day, and you're saving yourself or protecting yourself from any quick losses that the market can deal throughout the day. And another strategy that I would ask you to look into would be diversification. So always try to diversify your portfolio, right? Do not keep all your eggs in one basket. If, for example, right, if you are investing in like maybe just one stock throughout the day, and you believe that that stock is always going to rise, what happens if it doesn't, right? So just keep in mind that you may do all your research, you may be very vigilant in everything that you're doing. It is still a possibility that the market doesn't support that stock. Maybe at that time, maybe that sector is going down altogether. So do not invest, or do not just keep everything in one particular stock. Try to diversify as much as you can, right? The more you diversify, the less risk you have in that one particular stock failing, right? A couple of other things that you could do is you could look into something called as index funds or ETFs. So what index funds do is that they look into all these different sort of stocks, and they just create a single fund or single index for you, and you can just invest in that fund, and they're going to be basically diversifying your portfolio for you. So you can just invest in that one index fund, and you don't have to worry about how that money is going to be diversified. So there are funds out there that could help you in diversification. But yeah, that's one thing I would definitely say. Try to diversify as much as possible, right? It's basically going to protect you only. So yeah, I think that's most of what I wanted to say. I think actually I think it's काफी information, काफी ज्ञान, right? So let's focus on the main event. I mean, obviously I'll pause for a couple of questions that I can try to answer. And then I'll just hand over to the actual tournament or the actual implementation part, right? So I'll just give you a brief idea about that. If you do not have the app installed, I'll share that link here. You can go ahead and install the link for the app, and you can go to the tournament section and you can start playing. You can join the tournament. And yeah, if there are any questions or any concerns, please feel free to use the chat. I can try to go over a couple of questions, maybe 3 or 4 questions. And yeah, I hope you guys liked today's sessions. And yeah, I think that's pretty much all that I had to share about. Yeah, thank you for having me. And yeah, it's been a great time.
There's a question in the chat box saying, Sir, from Suman Saurav actually, Sir, can you please say in brief about Adani Wilmar IPO?
I actually do not have like the data for me. I mean, at this point, but I can look into it and I can give you some idea about it. Let me just see the chat a second. 1 second. All right. Yeah, I think I see it now. Just 1 second. Yeah, actually, honestly, to be, I don't have all the insights for that IPO. I think it's something that's going to happen very soon. I don't have all the data to brief you about it at the moment, but I can look back and maybe I can share some news articles about it if you want.
Okay. Is there any other questions? Please type in the chat box, participants. Or you can raise your hand so that we can unmute you to ask the question.
I think there's another question. Sure. So support and resistance, right? So as I said, everything in the stock market depends upon supply and demand, right? That's 101, rule 101 for any market. It can be in the crypto market, finance market, anything, forex market even, right? Supply and demand rules everything. So in terms of price support and resistance, what happens is, let's say if the price for a particular stock, right? If there are 10 people trying to buy a particular stock at 100 rupees, right? And the demand and supply is matching at 100 rupees. Great. What happens if the demand keeps on increasing, right? So what happens is the stock price is definitely going to increase because somebody wants to buy it at 100 rupees, someone wants to buy it at 105 rupees, and it keeps on going on. So there is a point at which the demand is going to be met, right? There's a point that, okay, 105, 110 rupees, but that's it. Nobody's going to give 1,000 rupees for a stock that's 405, right? At least nobody should. But what happens is that's the point where you have the resistance. And okay, this is where the demand has been met. It cannot really go any further. The price of the stock should not increase any further, right? Similarly, when the price is falling down for a particular stock, there is a supply that is being met, right? So people are starting to sell stocks, right? People are starting to sell that particular shares of that company. At one particular time, people are going to, start resisting it. People are going to start not selling it because they feel that price has been met. So that is the point of support. That okay, the price of that particular stock is not going to fall below that line or below that point. So this is like support and resistance, right? So that support line is basically the bottom line, that it should not fall below that support, and resistance line is the resistance at which you're not going to get any more attractions for that particular stock. So that's the support and resistance. I hope I was able to explain that. Right. If you have any follow-up questions, I can answer on that.
Shubham Gupta, any more questions? Any follow-up questions on that? Or maybe no. Yeah. No.
Right. I can answer one more. Okay. Also for upper circuit and lower circuit. So okay, upper circuit and lower circuit, right? It's basically the exchanges who decide, a particular band that a stock should lie in, or like a share should lie in. Because see, Indian, not only Indian, but any
it's 11 o'clock.
Any market.
Sorry.
Sorry.
Yeah,
That's fine. Yeah, so any market general, right? You have to be wary that not every consumer is going to be very vigilant about their investment or vigilant about their market, right? So what the exchanges do is that they try to prevent or they try to protect the consumers. And the Indian government also has a few laws out there that is trying to protect all the consumers that are trying to invest in. So which is why even recently we have the crypto laws and everything, right? So Indian government tries to protect everyone. They have to set a upper and lower circuit price. If they don't, then it's basically um, they're not protecting the consumers or not protecting the actual people who are trying to invest money in. So if it's a rich person, right, who has like crores and crores of rupees, they may not have a big issue when they lose like 10,000 rupees, right? But if somebody who's not that well off, who's like from a middle class background or from lower middle class background, if they lose 1,000 rupees, it's a big deal for them. So all these upper circuit and lower circuit prices are kind of like the governing uh, prices for that particular stock. And the exchanges are the ones who set that, but they're obviously governed by separate bodies. So I think I was able to answer that. Yeah. So Ananya, think I mean I can answer one more, but I think this is good.
Okay. So before we wind up this session, I would request everyone to download the app from the Play Store. Join the tournament, which is named StockPe 101 by GUE Cell in the app itself to get all the participant rewards and actually participate and implement your knowledge on stocks after this event. If you have not installed the app, please do it because our tournament is going ongoing. So don't wait till the last moment and not get profited in the market. So let's go ahead. That was an amazing session. Now, as time is running out and we have a contest to win, I would like to call Professor Vinny Sharma ma'am to present with the Certificate of Appreciation and Memento. Ma'am, are you? Ma'am?
Yeah, good morning, everyone. Ananya, am I audible to you?
Yes, ma'am, yes, ma'am.
Okay,
Priyanshu,
thank
would
you.
you please share the
Yeah,
certificate and memento?
yes. Before we share that, I would like to thank Mr. Kapoor for taking out time and joining us here on such short notice and, frankly speaking, answering the question in the most untechnical language, I would say, because understanding market and market trends is extremely difficult when it comes down to usage of the technical language, which has been used by the promoting companies also. And IPO is basically a very important topic today, when because majority of firms are coming up with their IPOs, and this it is very essential for the entrepreneurs and startups to understand what exactly is an IPO. It actually took me also to more than 2 to 3 days to understand what is this IPO is all about, and understanding with all my my family members, my husband, I was all, what is this IPO, who recommends it, how do they get permission and everything. Him being from management, so he helped me out in that. So, and then again, the colleagues that I have here at Galgotias, I was on their heads asking them questions all about. But if it would have, this session would have been happened earlier, then my queries would have been answered a very very well advanced level. So thank you so much, Mr. Kapoor, for joining us and highlighting the trends and the importance. I request Priyanshu to kindly share the screen if possible.
Shreyansh, if you may.
Yeah. Yes, Mr. Kapoor, kindly accept this small virtual certificate from our side. And once the COVID subsides, because we have already resumed the classes in the offline mode also from today onwards, as per the government guidelines, and we would surely love to have you here at the university with us, and we would love to felicitate in the in person to you. I hope that you'll accept our invitation and this token of gratitude from our side.
Yes. Thank you, ma'am. Thanks for that. felicitation that Spring provided here, and definitely, hopefully, welcome back in India. I'll be able to, join your college, and I can maybe hopefully have another session. But yes, thank you very much, and thanks for having me here.
Thank you so much, Mr. Kapoor. Thank you so much. Ananya, over to you, please.
Ma'am, we have another memento and certificate for the founder of StockPe, who is also here, Mr. Shubham Rawal.
Yeah, yes. Shubham, uh, it's an honor to be able to felicitate you, frankly speaking, because being a faculty mentor and a faculty of yours, it's a moment of pride for me to see my students shine at this level today, and it gives me an immense honor, and I can say a sense of pride that yes, I am able to felicitate my own student. So, Shubham, please accept this.
Thank you so much, ma'am. It's been great honor, actually, to come from a college where, to get a certificate from a college where you've been a student and you've been doing uh, Gator for India and for like the financial well-being of everyone. I hope everyone will also join us, will join StockPe in our vision, which is to make finance accessible to everyone and to help younger audience create passive income and learn about personal finance. Thank you so much, ma'am.
Thank you so much, Shubham, and I wish you all the best for your venture. And I am humbly asking all the attendees today that please, if you are interested into understanding how the stock market plays, do start accessing the app StockPay, because they will make you understand it and they'll help you out. It's a very tremendous team that it's working on. They are very good. They are extremely talented and always available.
So here we are nearing the end of this session. I would like to present the vote of thanks. First of all, this has been an amazing session, and it is my great privilege to present this vote of thanks and my sincere appreciation to one and all present here. Beginning with our today's guest speaker, Mr. Hridesh Kapur, I thank you on behalf of ESEL and our university for taking the time out of your day and sharing the knowledge and wisdom with us. I know, sir, it's been midnight in your place in US, and still you have managed time to prepare a presentation and help our student in learning the basic of stock market. Thank you, sir. Moving on, I would like to thank the founding team of StockPay, Mr. Shubham Rawal and Mr. 𝐻𝗪𝗏 for giving us an opportunity for collaborating with their startup and helping our students in learning about the stock market. I would like to thank the team of ESEL for organizing and managing today's session. Finally, we have our audiences who have been amazing throughout the event. I thank all of you for attending this session and being with us throughout. Now, as we come to the end of this astounding session, I would like to conclude by quoting M.F. Munzahir: build your life on your dreams because dreams never have bad endings. This concludes our today's session. And I would like to request everyone from the audience to fill the feedback form. The link will be shared in the chat box, or you may scan the QR code shown in the screen. And also, I would request everyone to download the app and participate in the tournament. The tournament section is there in the bar where you can click and find a tournament named StockPe 101 by 𝐺𝑢. Please participate and implement your knowledge of stock market and win an amazing rewards, which is provided by StockPe itself. Everyone is requested to divert to the app and enjoy the process of learning and implementing. With this, I would like to end the session. Please fill the feedback form and move ahead to the game of StockPe, where you learn and enjoy. Don't waste your time because the market is on. Bye. Avnish, would you please share the feedback link here for the students? Also, guys, there is no referral code as such by university. You can skip that portion and move towards the tournament and registration. In the tournament, you just have to join StockPe 101 by GUE Cell. I hope everything is clear. In any doubt, any issue, I'm going to give a number where you can ping, okay, in the chat box itself, which you can forward and get your doubts solved. This is the helpline number of StockPe, where you will get all your doubts solved. Also, if you know any of the member of eCell, you can also ping them for any doubts, which will be redirect, but it's suggested that you can ping in the helpline number for any technical issue or technical glitches that you're getting in the app itself. With this, I think we can end our session. I hope you enjoy using the app and learn about the stock market and its implementations. Thank you, one and all. Also, please fill up the feedback form.
The meeting has ended. I will be ending the session now.